Hey, it's Matt with PriceActionTradingSystem.com, and it's Wednesday. It's September 10th. Uh, this will be our chart lesson for today, and really pretty good trading day today. It was a little more straightforward. Uh, I was mostly playing the range. Of course, you wanted to play this short-term trend to the downside, and then this one's been pretty obvious too. But this is right in here, is just a trading range. You can see prices swinging back and forth to both sides of the EMA. Look how flat it is across there. It still has a downward bias. So notice there's not a lot of buys marked in there or anything, um, because it does still kind of have a downward bias. So when we were looking for a new low until right here, and then we were expecting the reversal, because look at this. Um, this looks like a break right here, but this really could be just a little higher. And so it's kind of an iffy break right there. You know, so I believe that that's the reason you got another break here and they pushed it to a new low and then it reversed. So, uh, but for the most part, once we came out of this downward channel here, I was playing this more as a trading range, and I really was looking at it as more of a trading range regardless, because it just looked like a trading range, and you could see this clearly up here. This wasn't hard to find. And when we broke lower, we made a measured move. It actually went a tick or two further right there, but most of the closes were right along that measured move line. We came back and tested it again. Um, it was tempting to go long right here, and it would have worked, I think, but I just don't like that setup. I think you were better off to wait. And you might have taken it. I probably should mark that one in green. I didn't like it because you definitely don't want to go short right in there. Somebody sent me their chart and they saw a breakout. There's no breakout pullback short really that set up on mine. I guess it went higher there and turned down, but you would have looked for a break below that bar. But make sure you understand that breakout pullbacks are really only valid during a trend. When it's a range day, most all breakouts are going to fail. Um, so, you want to see it trending, and we were trending down here, and there's a little bit of a breakout pullback short right there, and then we're trending up now, and there's a breakout pullback long there. But look, it's obvious we're trending. Look at the EMA; it's straight up, and everything's bouncing off the EMA. But look at it right in here, how prices are swinging to both sides, and how the EMA is kind of flat. That's a sure sign that prices are kind of range bound. So be real careful there. Same thing right here. This really started out and looked a whole lot like yesterday morning, or maybe it was the day before. Yeah, remember this day right here? How we started out right there, and we ended up with a trend down most of the day. But this started out very much the same right there, and you can see that. And you just find your lows off of that and drag it up. And it looked like there was going to be a channel. And it could be that the channel was right here, and this was the break and the move to the new low, um, and then the reversal. So that's a possibility, but I believe it because we didn't really ever use the upper side of the trend line. Notice how we just couldn't get back to it. So um, it could be that this is your channel, and you got your break here, and your move to a new low, and then it reversed. So that's always a possibility. So keep that in mind. But by this point, you should have been playing this as a range, and then by the time you got to the top, it was clear you had another trend going up here, and you can see it real clearly up through there. So no real surprises today, really. It was pretty standard, at least I felt like it was. If you struggled, then maybe you were trying too hard or missed something. And I know some of you did, because I got a couple of emails where people made, most of the time people are making mistakes of going short at these lows. You can see that the trend is somewhat down. There's a downward bias, and you're trying to get short, but you can't get short at these lows, and you can't get long at the highs up in here when it's ranging like that. So I hope that will help some. But let's talk about the trades. The first trade I saw, this was not real clear here, but notice we made a little double top, and then look how much lower that low is. Went right through the EMA, pulls back, and then turns down. Notice the new high, pull back, first entry long, pull back, second entry long, it fails and turns down. I would use a limit order here when it broke lower, but it doesn't matter if you use a stop or whatever, it still worked. But when it broke lower, I would have dropped a limit order in there, and you could have gotten filled, I know, right there at the lows, maybe a tick back in. And again, it wouldn't have mattered even if you used a stop, but it's straight down. And you're looking for prices to come back down and test this low. It bounced a little bit early, and then you get a two-legged correction back. And this was a pretty obvious trend line right down through here. Originally, I had it maybe just a tad lower, like so, and it probably is down there anyway. Usually when you get those little gaps, they're gapping over something. And you can see that fits a lot better right there. So I believe that's probably more like it anyway. And so you're looking for a setup here. This is your break of the channel, and you get a chance to go short right there. We had a little short-term trend line working up. We had the break and you high. It did test it again, but as long as your stop was where it's supposed to be, above the high of this bar, this one still worked. And then you got a second entry short right there, and look at that thing go. It just sold off like crazy. And you're looking for what you want to be looking for. Here's your first move, and there's two legs in that move, but that's one move in a bigger picture. So you're looking for a measured move, and look at that. It's a perfect measured move to the tick. So you know to be looking to exit somewhere right down in here, and then it pulls back and it comes right back to that trend line again, and you get another chance to get in. I went back and forth about whether or not to make this one green, but you should have had this line, and that's when I began to think this was a midline. And notice we weren't down to the low of the line yet either. It's off the EMA. It was a little bit risky. Like I said, I went back and forth about whether or not to make this one green, but I like the trade, and it was a quick, easy move. And then it pulls back. Notice it went a little lower, pulls back. That's your little breakout pullback short in a trending move. And it's right there at the EMA, or not the, I'm sorry, not the EMA, right there at the midline. And you're looking for it to come on down to this line and maybe even this line. And so there's plenty of room, and you get in there, and it was a fairly easy scalp. And then now this is, notice how this is all congesting here and it's overlapping. Well, there's a couple of reasons. First, there's the support here, the measured move from here to here. If you measure from this line to this line, you got a perfect measured move down here. And actually, it went a couple of ticks further, but all the closes and everything are above that. And you can see most of the touches are right there at that line. My chart's kind of messy there. And it bounces right there. It was really tempting to go. You actually could have gone long here. I would have liked it better when that broke higher if it would have turned down and then turned up. I just think you're better off. It's too congestive. I think you're better off to stay out of that. Unless when it broke higher, you try to get in with a limit order down here. That would be the only way. Because this is a failed break lower out of this congestion, out of the trading range, the whole bit. But you didn't have a lot of, it's bouncing off this lower trend line. You didn't have a lot of history of it bouncing here yet, though, so it's kind of iffy. And the bias is down, so I just think it's risky going long there. Notice that didn't close on the tie either. It would have worked if you took that. So if you took it, I think it's a little aggressive, but it worked. And then it comes back, and this was really, if this would have broke higher, I had a buy stop right there. It broke lower first, but it never broke a high, so I canceled it. And still would have worked, and you were looking for a possible new high. I don't know if this is a channel here now that I look at it. It never really, it's coming into play off the top, but maybe it's something more like this right here. And you start to get the closes outside, but the original one I had there just doesn't fit very well. And really what I think this move was just to bounce off the lows, and they wanted to test it again. But you see how that kind of fits right in there. It fits a little bit better. Actually, it fits perfect. So I think it's something more like that. The way I had it drawn, it just didn't play out that way. And so that's why you're always looking to adjust and change things, because sometimes you read it wrong. And this one was a little bit hard to find at first. but you get it off the highs and then drag it down, and lo and behold, it comes back into play there. So always make sure that your prices are fitting in there properly, and if they're not, then it's questionable. So just something to think about. But anyway, then you get a chance. Notice this was the top of the range, and it touches it and turns down. Look at that bearish bar. I like that for it to come back to here. And it actually goes a little bit lower. And like I said, this might have been close enough for people to question whether we had a break. And so then you get a break here and a couple of legs down to a new low, and it reverses. And off we go to the upside. There was an aggressive long here. We already talked about that. Again, you just got to stay out of this stuff. Look at it. Failed out the top, failed out the bottom, and then went back lower again and trapped everybody. It failed out this low again, and then it traps everybody and turns up. I like this. When this broke higher, I just used a stop there. You might have tried a limit order, but once you get that failed break and it's going higher like that, and notice how it backed up a little bit off the EMA, but it didn't reverse off there like you would expect, kind of like that bar did. So I felt like we had everybody trapped in, and I like that. And I was looking really for prices to come back up to here and also back up to here. Notice that's kind of where things started to intersect and kind of get hung up again. So I like that trade for just a quick, easy scalp, but it turned out to be a really good trade. Any runners would have, you could have ridden it all the way to here. You could have ridden it until you got the break right here and probably exited right here if you wanted. But generally what I'll do is ride it to the next logical place, which would be either here or here. And pretty good trade right there. And then notice this is a new swing low because it's lower than that swing. It's lower than that swing. And so that's a new swing low. You're going up, you get a first entry short, you pull back, you get a second entry short, it fails. So now you got everybody trapped. Just take that to the long side. Nice, easy trade. Then a two-legged pull back to the EMA, the trend line. Notice a little short term, you get a little close out, a move to a new low. Look at that. You really could have gone long there, but definitely when you saw that bar, and you wouldn't have had much time there, so you almost had to go long above that bar. The little doji right there. But this is another one. Any runners would have been easily safe and still going. And then guess what? Another two-legged pull back to the EMA. That's not the best looking signal bar, but that could have easily been a green bar on your, because it ticked up or down, and it might have just happened to catch the last tick called a down sell where it could have instantly clicked up. So some of you might have had a really bullish. I mean, that's close enough. That could have easily been green. So, but what I really like about it is notice those little that little double bottom is that little failed break lower, bounces. It's a small one, so it's a real low risk entry to try to get here. And once again, it just took off like a rocket. So again, any runners would have been safe. So this was a really good move right here. There was two really good moves in the down sell here and here. And then the rest, actually there was a pretty good one here and here if you took this one, but I just think that one was risky. I really thought we'd bounce and go to the other side there, although we didn't. But looking at that, the odds are that this thing would go higher here. It just happened to be the one time it didn't, but when it turned down on the second entry with that bearish bar right off the midline of that range, then I really liked it to the downside. So you had this move and this move were really nice to the downside, and then you had about 3 moves that were really nice to the upside. So if you just caught 1 or 2 of them and you had a runner, you can make some decent money today. So you don't have to take every trade, and that's what happens to people. They get caught up. They're constantly looking for an entry, and sometimes it's better off just to watch one go without you than it is to try to get a trade. Anytime you're not sure what's going on, just sit tight. And right in here, even though there's a good short here, it's not a good setup. I wasn't sure what was going on. I really thought prices were going up here. So when it starts going down again, you're wondering what's going on, but it's not what you're expecting to happen or what would happen in most cases. So you just stay out. So you miss that trade. Comes back and it gives you a better entry here, and look at that move. So by being patient, you're better off. But if you got stuck going long here and then it's selling off, then you're in trouble. Or if you wait till it gets way down here to get short, then you're in trouble. And what happens is people usually get short right here at the very bottom. And then look at this. I love these little final traps like that push below a strong support and they catch everybody off guard. And then suddenly it's racing. It does. They don't. These don't hardly ever come back. At least not until you've taken so much pain you can't stand it anymore. But these are great setups. I love those. And I thought there's a possibility you might get one here, but it just didn't set up properly. But generally, once you get those and it starts moving, they're not coming back. They just don't come back. And the reason is they have everybody trapped. And I guarantee there's somebody watching this video right now that got short right there and probably watched this go until they just couldn't stand the pain anymore. Or they might still be watching it just saying, please come back, please come back. So if you catch yourself begging the market to come back or praying that the market's going to come back, that's not a good sign. And that's a great sign that, hey, just exit and take the hit before it becomes a worse hit or a blowout type day or whatever. That's how people blow their account out. They keep wishing and hoping that it'll come back, and it just keeps eating away at them. Next thing you know, they're sitting there saying they're mad, they're all upset. Who cares? Just go ahead, take it all. I'm done, whatever. And that's exactly what happens to them. And so, as hard as it is to take that hit, just take the hit before. You can always make back a point or two. But if you lose 8 or 10 points or more, you can't make that back in one day, and you're doomed. And, if you're like most traders trading with a small account, you blow your little account before, in one day on one trade. And I know I've been there and done that, so I understand. And I still fight that today, that when I'm just flat out wrong, it doesn't happen as often, but when I'm just flat out wrong, I still fight that urge to say, give it a little more room, because you're usually not wrong, and it'll probably come back, and then next thing you know, it doesn't come back. And these traps right here where they break it lower, or when there's a downtrend, they break it higher, like right here. This was kind of a rangy looking, and they broke it higher. And what happened? It fails, and next thing you know, it's racing lower. This one came back. And what'll happen is you'll get lucky one time and ride this out, and it does come back, and then you try it again the next time down here, and it never comes back. Next thing you know, it's 20 points higher, and you've just lost 20 points. So if you're only trading singles, so if you find yourself hoping and praying, please come back. I can tell you right now, that's the surefire signal that, hey, it's time to get out. Don't fool around. Just take the hit, exit, and start over. Because think about it, if you just lost a point here, there's plenty of chances here to make that back and more. But if you sit here on a short, especially from right here, and you're riding this out, it never comes back, and you take a huge hit, and it's just not worth it. Where if you only took, let's say you get short right here, and then when it goes higher, you go ahead and exit. Let's just say you lost a full 2 points. You could have made that back on any one of these. This one, or this one. You probably wouldn't have. You might have even caught a runner on that one. I can't remember if that one came back. Your entry would have been 87.25 if you didn't use a limit order. If you used a limit order, you could have definitely had a runner here, but you entered 87.25. No, that one, you could have had a runner right there too. I was thinking that you probably could, but this would have been a runner too. And you could have made it back on any of those longs right there in just one trade, if you're using runners. If not, you're just probably scalping out, but with a couple of trades, you could have made it back. So I hope that's clear. Not much else to talk about today. Pretty good trading day. Let me see if there might have been something I wanted to share. Hold on just. Okay, I think I already talked about that, but just to make sure, somebody went short down here and called this a breakout pullback short. But understand, this is definitely ranging right in here. Look how it's swinging on both sides, and you don't want to use a breakout pullback on a range because 9 times out of 10 they fail. Now this one was a little bit different. Notice that we're trending up now. Plus, we weren't quite to the highs of the day. Even if this thing was going to turn down here, there's a chance that there's still room to scalp out before you get back to these highs. And there's no break of this trend line yet, so there's every reason to like this one. And this is not really a breakout pullback long, but you could look at it. It's a two-legged pullback to the EMA, the trend line, but there's that little trap again. Notice that little double bottom and that one move lower. It's like it is similar to a second entry long on a breakout pullback long above this area right here. So, but yeah, generally on range days, you want to stay away from the breakout pullback entries, and they're really only good on trend days. So if the market's not trending, breakout pullbacks are very suspect because most breakouts of a trading range are congestion fail. And here's a perfect example in congestion. Notice how it's congesting here. It broke out the bottom, failed. Then it runs out the top, fails. Runs out the bottom, fails. And then that's like a little breakout pullback short, but even it fails and reverses. Finally, you get out the top, it pulls back, it tests it. And you don't want to take that first entry, but when that little failed second entry comes, and everything is closed above that line now, which is where the resistance was, now it takes off. So that's what you're looking for. So I hope that's clear. Seemed like there was one other thing. Okay, here's another chart that I got from a trader who's fairly new. He's been having some good success. He sent me some other stuff that I've showed you lately of his, but he's seeing this pretty well. Best day ever, had two stop out, did not read price correctly. You got stopped out right in. Look what's happening. It's right in that trading. It's right in that congestion. Just stay out of that stuff. It's not worth entering in that stuff because that's what happens. It whipsaws you. And that's where he made his mistakes. Once he got out of that, he read it real well. And, he could see the support right here. He's buying it. He's selling these highs across here. That's really good. One thing I do see he's doing is he's on a downtrend. Even though you're going to get support off this line, I would be leery of buying it. You're always better to wait on stuff to come back. But if you get good enough, you can definitely buy these lows and do pretty good. But I prefer to skip those because you will get burned on them, and because sometimes it just keeps going. And you're better off to just wait on all of these down through here. And then he saw this channel working up, and he's got it drawn pretty well there. So he's now buying. So very good. I want to show his. Please have a look at my chart. It's starting to click for me. Had my best day so far, plus 8.25 points. Feel free to share if you like. So very good by this gentleman. He's learning. He's getting better every day, and that's what you want to do. I mean, that's how you get better. And that's one other thing. I got a note from a lady. I believe it was a lady. I can't remember. That she was really having a hard time reading this right in here. And what the fact was, she missed the fact that this is a trading range. And so she was getting whipsawed, and it really had her discouraged. And what you have to understand is that so much of what we do here is mental. You cannot get discouraged. And understand this, if you're not sure, and she basically admitted, I really wasn't sure what was going on, I'd get short and it'd bounce, and I'd get long and it'd go down. Well, that's what happens if you're not reading it properly, because on ranges, when you hit the highs, it goes down, and when you hit the lows, it goes up. And most traders want to see it moving down, and they get short right down here, right before it reverses. Well, all the smart traders got short here, and they're exiting down here. And then they're buying back down here and going long and exiting at the highs. And so, but so much of this is mental, you can't let that get you down. If you're wrong, you're just wrong. But understand this. Make sure if you don't hear anything else I said in this video, hear this. If you're not sure what's going on, don't take a trade. Wait until it's clear. If you couldn't figure out what was happening here, all you had to do was wait, and then you got a clear trend. It was obvious what's happening. If you'd have bought any of these that came back to the EMA, you made money. They were all good scalps, and most of them had a good runner. So it's obvious what's happening here. We're trending up. You finally got a break, and now we're trying to make a retest of the high. So make sure you get that. And if you're not sure what's going on and you take a trade, you are gambling. And we're not gamblers. You can't make money gambling as a trader. You will lose. And so you have to understand what's going on. You have to be able to read the price action properly. And if you're not reading it properly, you'll generally know because you're not sure what's going on and you're not sure what to do. And if you're not, that's when you don't take trades. So again, if you don't hear anything else I said today, make sure you hear that. If you're not sure what prices are doing or where prices are likely headed, we don't know where prices are headed long term. But this strategy, you generally know where prices are headed at the moment enough to get a scalp out of it. That's the whole idea behind what we do. Notice that every one of these moves is good for at least 4 ticks. Some of them a whole lot more, but that's the idea. We don't know where prices are going. You know, prices are way up here, but by the end of the day, we may make a new low or we may be 10 points higher. You can't get it that far ahead. So, but we can easily figure out what's going on and where prices are most likely headed in the next 5 to 20 minutes for enough to get a scalp. And that's the idea behind where we're entering here. So make sure you get that. And if you don't understand what's going on and you're not sure where prices are headed or what they're doing, then don't trade. Just sit through this and let it in. And then all of a sudden, it was pretty clear here what prices were doing until you got into the congestion. But the reason that's congesting is you found support and all the buying's coming in. And you don't have enough selling to drive it lower anymore. So that's the reason it started congesting right there. Same thing here and same thing here and same thing right here as well. There's still a lot of buying. They finally broke it through, but the buying was just too much, and eventually they're going the other way. And that's how the market, same thing up here. It broke out, but it couldn't overcome the selling. There wasn't enough buying. People didn't like it at that price, and most of them wanted to sell, and down it goes. So keep that in mind. There's a reason. When you start to see that congestion, there's a reason. It's telling you something. And notice it's at the lows here and prices bounced. It's at the high. There's congestion right here. It's at the highs and it goes down. Comes down here, it congests here. It's at the lows, it goes up. Look at this congestion on the upside. And then it tries to go down. It finds congestion right there on the low side and it's going higher. And so that congestion is telling you something. And all that is just a real tiny, when I say congestion, it's just a small trading range. And our rule on that generally is if you see three or more bars that are overlapping, and especially if you see a couple of dojis in there, like this right here, this right here, right here, right here, almost even right here. This is not as bad. There's, but the reason it's congesting is you're running into that resistance right there, and it sells off. So keep that in mind. If you see 3 or 4 more bars overlapping, and 1 or more of them are doji, then something's going on there. There's a little trading range, or what I call congestion. It's not big enough really to be a range. It's just a small congestion, but it works the same way as a range does. So just a very small range. And look how we're still trying to go higher here. And guaranteed there's people that got trapped short right in there. So anyway, I'm going to wrap it up for today. Hope you had a great trading day. We'll be back to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.